Hello everyone, happy Friday and welcome to Pinex weekly market updates and trading suggestions. And today, our professional trader Jay will teach you how to earn high yield during sideways market. For those who are not able to come to this live stream, or you cannot be here for the entire time, this live stream will be recorded and uploaded to our YouTube channel. Be sure to check them out. So without further ado, let's get started and welcome Jay.
Cool. Thank you, Sia, for introducing me. Welcome, everybody. Thanks for joining our live stream today. Happy Friday, guys. Let's get started. If you guys have any questions anytime during the stream, you guys can just put it in the comments. We can make it interactive so it's not so just me presenting stuff. If you got any questions, I would love to answer them, and we can make it like an interactive kind of thing. Let's get started. Where's everybody from? Is this on? Can we see the chat from YouTube coming in right here?
Yes, you can
Beautiful.
see on the right.
Can somebody type something in the chat so I know? You guys can I don't know, type in the chat here. Hey, what's up? Italy.
Wow.
Cool. All right. Where's everybody from? Anyone from the US or everyone from like Europe and stuff? Or Thailand? I know we had some Thailand customers. All right, when I'm presenting, I can't see the chat yet, by the way.
Okay, I can just read out the questions out loud to you.
Okay. Yeah. So welcome everybody. Today I'm basically gonna go over how to earn high yield during the sideways market, because as everybody knows, in the past 2-3 weeks, prices have been just going sideways. And if you count, if you are talking about an even bigger range, we've been basically trading in a range within the past month ever since the FTX bankruptcy. So yeah, we're just going to be basically going over some of our new products that are available on the Pinex platform and how you can use these to generate some yield in this market condition. So number one today, what we're going to go over is how to find a bottom, or what we are looking at least to see that a bottom is in. Second, we're going to look at some macroeconomic factors, because that really affects where Bitcoin is trading at, where crypto is trading at in general. And it also relates to finding the bottom if we're trading in a range and things like that. And then we're going to go over some charts, just some technical analysis on Bitcoin, Ethereum. And if you guys want me to go over any other coins, you guys can put in the chat. And then we're just going to do some trade recommendations, basically introducing our products, the new ones and the new features and updates to our app, and how that will generate some high yields for you in today's market conditions. And then after that, we'll do some Q&A. If you guys have any questions, you guys can let me know, and we will do our best to answer them. So let's get started. So predicting the bottom. So 2 months ago, we predicted that, the Bitcoin bottom really wasn't in. And I know a lot of people were thinking 18,000 was the bottom. And, we thought the same thing maybe like 4 or 5 months ago, right? When Luna crashed and things like that. But seeing the way the economy was going around the world, we really didn't believe this was the final bottom. We just didn't think that enough people were facing enough pain. There were still a lot of people bullish on Twitter. There were people still posting, influencers are still very active, and that's not really a sign of a lasting bottom. So of course, on the daily chart, it looks like this is a technical pattern. It's an inverse cup and handle. But obviously, people can just draw whatever they want on a chart, right, and form patterns and stuff. Doesn't mean it's going to come true. But I think the most important factor you got to take into consideration is the sentiment surrounding cryptocurrency and economic conditions surrounding the world, right? And then factor that into technical analysis. So 2 months ago, we predicted the bottom might be around 12,000. So obviously, we're at we got it to a low of 15,500. But we do believe the bottom is still not in yet. So we'll see some of the factors. So what we're looking at is the S&P 500, which is the stock market index for the U.S., the 500 top U.S. stocks, which is what everyone around the world really looks at, as the U.S. is the biggest stock market in the world and the biggest financial center. So as you can see, this is a chart in 2018. The golden line is Bitcoin and the blue line is S&P. Well, it's kind of hard to see from this chart, but Bitcoin bottomed whenever the S&P 500 hit a bottom as well. I know it's very hard to see on this blue line, but it's easier to see over here. During this big decline in the stock market, Bitcoin tanked, right? It literally tanked from 7,000 to 3,000 after the first initial bottom. And over here, the S&P 500 also went down. This is the biggest drop downs it had in from 2018 to 2020. So as you can see, the stock market and Bitcoin are very correlated, because Bitcoin is a risk asset, and people who are investing in it want to make money, right? Of course, we want decentralization and everything also, but a lot of people are still just in it to make money as a way to generate profit. So we also compare it to different financial assets. So if the stock market hasn't bottomed, there's a very unlikely chance that Bitcoin has hit a bottom as well. So currently, as you can see on this chart, Bitcoin, and this is Bitcoin and the stock market today. Bitcoin is on the way trending down, and the stock market has been trending down also, even though it's not obvious on this chart, because obviously the stock market doesn't fall by 80% like Bitcoin does. But the correlation, at least within the past year, has been very high, almost a 1-to-1 correlation. Recently, with the FTX bankruptcy, that doesn't affect the stock market, so that's a Bitcoin specific event, and that has caused like the loose of correlation between SPY and Bitcoin. But we expect this to pick back up 2023. 1 second. So another factor that we look at is the miners, right? So obviously Bitcoin is mined by Bitcoin miners. And when we see a decrease in miners' net positions, it means that miners are selling. And usually miners do not sell their positions, because if you're a miner, usually you are very bullish on Bitcoin. And that means you're usually holding a big position instead of just selling whenever you mine. So whenever we see a capitulation of miners, that means a big increase in selling. That has been associated with Bitcoin bottoms in the past. And then we'll move on to the next chart. So this is the hash rate of Bitcoin miners, right? And the green line is a 30-day average of the Bitcoin hash rate, and the blue line is a 60-day average of the Bitcoin hash rate. So whenever the green line has crossed under the blue line, it has predicted either a local Bitcoin bottom or a final bear market bottom. And we'll show that to you in the next slide. So this basically, because Bitcoin prices tanked, a lot of Bitcoin miners are not profitable anymore. So they're shutting down their machines, and the hash rate has dropped 15% in the last week. And as you can see here, whatever is highlighted in red represents a hash rate, basically what we talked about before, the hash rate ribbon when it crosses to the downside. And if you look at the highlighted in red parts, most of these have been associated with a bear market bottom or a local bottom. For example, in 2018, within a month, Bitcoin bottomed out at 3,000. And then again in April of 2020, this actually crossed after Bitcoin bottomed out, but it still is a very good signal as it is within 1 month of when Bitcoin bottomed out. And then the other times, Bitcoin has been basically shown a local bottom. And as you can see, prices have went up at least temporarily after each of these hash ribbon crosses. So this has been historically a relatively good indicator of a local bottom. And again, going back to the previous chart, we are seeing that right now, right? So back in when during the Luna collapse and all that drama, we had a hash ribbon cross as well, and it has shown that it was a temporary bottom. But of course, prices tanked farther. But again, the hash ribbon is crossing today, so we could definitely be seeing a temporary bottom at least for the next couple of months. And then finally, just general miners profitability analysis. Uh, so for the miners, right, they have to pay electricity, they have to pay cost to host their mining systems. Their production costs for the newest miners, for the most robust and well-funded miners, usually their cost to produce a Bitcoin is 12,000. So, and in the previous bear market in 2018, prices have fell down. When prices bottomed out, it was when it fell below this shutdown price for miners. So when miners are not profitable anymore, Bitcoin has been shown to be at a bottom. So that is also why our prediction is the bottom of Bitcoin is around 10,000 to 12,000. And recently, in the past month, when Bitcoin hit 15,000, 16,000, we have seen whales. So Bitcoin holders with over 1,000 in Bitcoin quickly and largely accumulate a large amount of Bitcoins. And obviously, this shows that smart money is accumulating and not panicking and selling like most of retail traders, right? And so this is basically our prediction to get to 12,000. Back when Luna blew up, Bitcoin went down 35%. And then the contagion effect. So basically, Three Arrow Capital, Voyager, and Celsius, Babel, BlockFi, all these firms going bankrupt. That is because that's due to the Luna collapse. And then Bitcoin drew down another 35% when all those companies went bankrupt after the Luna collapse. So this time, during the FTX collapse, we don't really have that many people left, but FTX going bankrupt, Bitcoin went down 25%. And then we obviously we have some other people that are kind of in trouble, like Genesis, Gemini's customers, and BlockFi just went bankrupt, right? Like officially this time. So we think that with that contagion effect, maybe within the next couple of months, basically in early 2023, and with the stock market crashing, we could see another 25%, which is accurately basically the measured move of the FTX collapse. So FTX caused 25% drawdown, and we are seeing possibly another 25% drawdown to 12,000 as our target. And this, of course, is in line with our prediction of 12,000, as long as also with the miners' cost of production. And then we're gonna go over some macroeconomics. This is good. I'll say 10K. Okay, cool. So as I said before, right, the stock market is very highly correlated with crypto. Crypto is basically seen as tech stocks because, so for tech stocks, they don't really have cash flow, right? They have cash flow in the future because they're expanding. They don't really have an established customer base, whatever it is. And crypto is kind of the same. It's very new technology. It's almost like a startup, right? Bitcoin isn't like Bitcoin just doesn't have cash flow, but Ethereum, you can say the gas fees are kind of our cash flow, and then whoever is building on top of the network, as the network grows, we're getting more gas fees and things like that. So same thing for tech stocks. And so why is macroeconomics important? It is because that affects the general economy and liquidity of the financial markets. So without liquidity, stocks will not go up, right? There's no loans, there's no leverage, there's very little expansion. And interest rates. With low interest rates, it means that money is cheap. We can do whatever we want. We can borrow money, we can lend money. But when interest rates go up, risky stocks like tech stocks and crypto, they tend to fall because what we do in financial industry is they discount that the future cash flow is discounted by the current interest rate. So when interest rates go up, that future cash flow is worth less today. So that tech stock worth $100 when interest rates are low, but when interest rates are go up to 5%, their future cash flow is worth maybe like 30% less, right? So that's why you see tech stocks falling heavily. And then here's a quote by Jay Powell. So basically, he's the Federal Reserve Chairman. He and his colleagues determine how much to raise the interest rate. And in the last month, basically, he came out to say that, hey, we might be decreasing interest rates soon or slowing down the pace. And so the market took that and ran, right? That's why, Bitcoin didn't fall farther. The market kind of just ran up like 10%. And yeah, but I mean, if you read his statement, that's not really what he's saying. He's saying we will stay on course until inflation is down. And actually, they have not even hit their target interest rate of 5% to 7% yet. So we still have a long way to go. But the market, of course, just wants a quick pump before Christmas. And we also see the same thing. We just think the market is probably going to run up till the end of Christmas. Crypto might go sideways or might go slightly up. But the traditional stock market will probably trend up in December. But then in Q1 of 2023, we're probably going to see a dip once again. So this is the 10-year Treasury bond, which is American government bonds. And this is a 10-year minus the 3 months Treasury bonds. So this has predicted every recession in the past 50 years. And of course, why am I showing you this? This is signaling that we will have a recession within the next 6 months to 1 year. As you can see, this is going the negative, right here on the right side of the chart. And then everything highlighted in gray, that's periods of recession. And then right before the recession, what do you see? You see this 10-year and 3-month cross the zero line right here, right? And this has predicted a recession basically every time. So if you guys are up to date on the news outlets and everything like that, everyone is saying there will be a recession. So will there still be a recession if everybody's expecting it? We say yes, because recession isn't based off of sentiment, right? It's based off of economic factors. And through the data, we can see that people still hold a lot of stocks, and stocks are naturally risky assets. We can go over some of these. And of course, right now, the unemployment rate is still at 3.7%. That is the lowest unemployment rate basically throughout the 2010 to 2020. And with this low unemployment rate, obviously, we're not in a recession yet, but the interest rate effects are lagging. So that means interest rates basically precede the unemployment rate by anywhere from 6 months to 12 months. So as economists predicted, so this is a survey of around 50 economists from around the country, and most of them are predicting a 6% unemployment rate. So that's almost double what we have today. And with that, obviously, the stock market and consumer spending and everything is going to slow down, and we can definitely foresee at least a 20% drop in the markets. So next, we're going to go to some charts. So this is a chart of the futures funding rate in different exchanges. And as you can see, this is largely still very negative ever since the FTX collapse. And this means that a lot of traders are still short. And one thing we always say in the markets is if everyone is short, then the market's not going to go down. The market will always, most of the time, not always, most of the time, go in the opposite direction of where the mass is positioned. They want the mass to lose money, right? Not everybody can be right. So if we look at a chart, now we're going to look at a daily chart of Bitcoin. So as anyone can see, Bitcoin has been basically consolidating inside of this trading range. For the past 2 weeks, it's been in a very tight trading range. And for the past month, Bitcoin has been in a larger trading range of 15,500 all the way up to 17,300. So how can you profit in this type of environment, right? You could be trading, buying the bottom, trying to buy the bottom, but of course you don't know if that is going to be the bottom. And especially in this tight range for the past 2 weeks, there's almost no opportunities to trade. There might be like a 0.1% or 0.5% profit, like maybe a little bit of space in between these little candle bars. But most people are not trying to capture that, right? And it's very hard to get the top, sell the top, buy the bottom anyways. And we'll go over what products to use in the next section. So zooming in on a 4-hour chart, right, we see resistance at 17,300 that has been tested for, let's see, 1, 2, 3, 4 times already, and we have been rejected each time. This is a very strong resistance zone because we sold off. Going back to the other chart, we sold off from the FTX collapse. And if you look on the right side of the chart, there is basically no volume traded in this zone. So this could mean two things, right? It could mean that a lot of people want to sell but never got a chance to sell. So as prices go up to this price level, a lot of people are dumping their Bitcoin at that level because they didn't get a chance to sell when prices just completely flush to the downside. However, if prices do get into the supply zone, that means it has broken the wall of resistance, wall of sellers, right? So then this low volume zone can represent a very easy level for prices to just shoot up all the way up to 18,300 because it has broken through the initial level of sellers, and then anybody who wants to sell is probably done selling until the next level, which is 18,300. But of course, we're inside of this bigger trading range from 15,500 to 18,300. And right now we're in the middle of that level. So Bitcoin prices can really go either way. The only bias I have is that I do not think we will break this low until next year, just because, as I said before, with the Christmas rally, with the stock market doing fine currently, right? Currently, they're doing okay. So the only bias I have is I do not think we're going to break the low of Bitcoin. So for Ethereum, it's basically the same story. Ethereum is actually stronger than Bitcoin right now. Let me see. And for Ethereum as well, it's trading inside of a very tight range, right? And we cannot break this 13,000 resistance up top, and which is also correlates with a very high transaction zone in the past. And we see support basically at 12,025 that's been tested 3 times in the past month as resistance. And then, of course, it turned into support as Ethereum came down to test it again. So as you can see, we are just very stuck inside of this tight trading range, and it's very hard to trade. I'm going to skip Solana. And so how do you profit? How do you profit from this type of trading environment and this type of trading range? Because the trades are just going back and forth, right? You're just going to get chopped. There's very hard. It's very hard for you to predict the top and the bottom of each trade, especially if you have other stuff to do, right? You have other things to do in your life as well. You can't just be watching the markets 24/7. So our first product has been out for a while, but for those people who are new and don't know about it, it is the dual investment product. So basically, with this product, you get to choose a price level that you want to buy whatever crypto you are choosing, which could be Ethereum, Bitcoin, Matic, XRP, whatever is your favorite, and you will get paid interest for basically buying the crypto at that price. However, the risk is you have to buy the crypto at that price. Even if Ethereum, let's say, goes below, let's say you select the 1,100 to buy Ethereum at 1,100. If it goes below 1,100, you still have to buy Ethereum at 1,100, but you also get yield interest in return for that risk you are taking. So for this product, what we usually recommend is a short-term duration, so like 7-day to 14-day expiration, and a strike price that is at support. So like I said before, for Ethereum and Bitcoin in general, I don't believe we're gonna break below the bottom that we have put in, which is 11,000. So choosing 11,000, this will return you 12% when it is annualized. Uh, so this is a relatively stable yield, but you have a very low chance of actually getting executed, which means uh, like I said, there's a low chance of prices getting to 1,100. Or if you're a little risky and you want to get a better chance of getting executed, but a higher yield, you can select a higher price. For example, in this one, it is 1,150, only $50 more. But for Ethereum, $50 is still almost almost 5%. So that is not a tiny move. So this will return 23% interest annualized, which is almost double what the 1,100 strike product returns. And for those of you who are already holding crypto, you can also do a covered gain. So this product basically means you want to sell. Instead of buying, you're selling your crypto at a set price. And we are paying you interest for selecting the price you're going to sell at. And on this product, for example, on Ethereum, I don't believe Ethereum will go over 1,400 as the top level of the as the top of the price. So this will return you 30% interest annualized, right? And also prices are 13% higher than current prices. So you get 13% gain if you get executed in 7 days, and you get interest on top of that. So I would be happy either way because I would make 13% on my Ethereum plus whatever interest is on top. And honestly, I don't believe that Ethereum will go much higher than 14,000. So this is a great product for anyone who is holding Ethereum. And you can do similar things with a Bitcoin product. And we can show that to you later if necessary. And then our new product is perfect, basically, is made for the sideways market. So this is our flying wheel product. So basically what this is it's an automatic trading strategy that will select a very close dual investment product on the downside. And then if that gets executed, it will in turn sell a covered call, right? It will do a covered gain product to the upside at the price that you bought that crypto at. So this one for right here returned 8% within 2 weeks. Just a note, this product is pretty high risk because there's a risk of you getting executed, right? But within a sideways market, when prices are just range bound, this is perfect because even if you get executed, prices probably will bounce back up. So in the past 2 weeks, this generated 8%, which is way better than anybody can trade in current market conditions. And the traditional stock market returns maybe 8% a year, right? So 8% in 2 weeks, that is basically that is the gains that everyone dreams about. So for this product, you don't even have to make your own settings. We also came out with a new feature on our app where you can just go to the homepage and you can go find this order and just press copy, right? So right now, 2,000 over almost 2,000 users have copied this trade with $500,000 invested. So you guys can just check out different trades that different people have posted. But for a sideways market, this is the best strategy, right? Generating 8% in 2 weeks, I can't even make that much trading. There is no way I could make that much trading in current market conditions. But yeah, just be aware of the risk though. If the market does dump, you will be executed in your order and you will probably buy Bitcoin at a pretty high price. So for example, right now Ethereum is, or let's say Bitcoin is 17,150. It will probably set an order for 17,000. So if the market completely dumps to 16,000, you're going to be stuck with Bitcoin at 17,000. So that is why it's very crucial for you to know what type of market condition it is currently. So yeah, that's it from me. If you guys have any questions about the products, please let me know and we will do our best to answer them. So yeah, just a quick summary. Basically, our prediction is that Bitcoin will bottom out around 12,000, 10,000 to 12,000. And one of our other users did ask, like, what if we had like a complete economic meltdown, right? Like a complete economic meltdown, like 2009, where Lehman Brothers just go bankrupt. Well, I don't see that as a likely scenario. But when that does happen, Bitcoin will probably break that 10,000. So whenever there's a black swan event, nobody can predict that, right? Like FTX going bankrupt, it randomly just happened. But if there is like a very bad global recession, Bitcoin prices will probably go to maybe 6,000, 5,000. But as you guys might know, in the previous recession in 2009, when Lehman went bankrupt, that is when Satoshi came out with Bitcoin, right? Because of his distrust for the financial system. So even if we do get a financial crash this time and Bitcoin does go to 6,000, that would just be a very good buying point because then it would just show the weakness of the financial system and more people would probably see the decentralized factor of Bitcoin and see how important it is compared to the weakness of the global financial market. So if it goes to 6,000, totally would just buy everything I can. So how does Pinex make money? So Pinex makes money because we are so basically if you sell us, it depends what kind of product you're talking about. So which product are you talking about? For structured products like covered calls or grid trading bots? Probably structured products, right? I'm just going to assume you're talking about structured products. So for structured products, Pinex, dual investment. Yeah, okay. So dual investment, you're basically selling us a contract, right? So if price, so let's say you try to buy Bitcoin at 15,000, and Bitcoin goes to 14,000, right? So you have to buy at 15,000, and prices currently are at 14,000. So Pinex basically can buy it at 14,000 and sell it to you at 15,000, right? If that's the scenario. So, but if it doesn't go to 15,000, Pinex just pays you interest. So basically, that spread, that difference, is how Pinex makes money. And if you want to know more about the risk as well, because one of the users did ask about more of the risk this morning, and I explained it to him. But that's basically that's the general yeah, that's the general concept of it. And one user in the morning asked if how can we afford to pay you interest, right? What if like the market doesn't move at all, and then we just have to keep paying you interest? So that is one risk, but Bitcoin market doesn't just stay flat. It doesn't just stay at 15,000 forever, and we hedge all of our products. So we are delta neutral, right? So when we buy an option from you, we actually hedge most of our exposure. So we just kind of we're delta neutral, and we don't actually take any directional exposure. So we're not related to Binance at all. We do market making on Binance, so we provide liquidity on Binance, but we don't have any direct affiliation with them. And of course, we don't do any of the sketchy stuff like lend out your money, whatever FTX did, right? Like lending money. We don't do any of that. Everything is 100% backed, and we're currently getting a firm to audit us as well to show a proof of funds. Oh, you can show comments. Cool.
Yeah.
How are you guys related to Binance?
I have a question, Jay.
Sure.
So, like, how do you usually find the resistance level and support level? Like, I guess it's beneficial for some new crypto investors.
Mm-hmm. Sure, no problem. That's pretty. We can explain it pretty quickly. At least the easy way to do it, right? I would just look at the main ones. So, for example, right, Bitcoin. You see, it hit the bottom at 15,500, and again, it hit the bottom at 15,500. Actually, you know what? This one's better. All right, for Ethereum, right? So for Ethereum, we traded. Can you see my mouse?
Yes.
Okay,
Definitely.
perfect. All right, so Ethereum, we got buyers here, we got buyers here, we got buyers. So what is that? 13,000. So we got buyers at 13,000. 1, 2, 3, 4, 5, 5 times, right? So obviously that level is strong. So when we sold off during FTX, we just broke that 13,000 very quickly, and then you can see we came back up, tested that 13,000 once again, and so this level is known to be a resistance or support, right? Support turns into resistance once it's broken. So because this level was tested so often, we can just basically assume that it's a strong level because it has been tested in the past, right? So when prices came back up this time, if you zoom in, it tested it 1, 2, 3, 4 times again, right? 13,000, and we couldn't pass this level. So it's just about historically how many times this level was tested, and what prices did when it hit that level.
I see. Okay, there's one more questions.
Will Pinex be producing new video content? Yes. For the new, for the new bots, we will definitely provide YouTube content and tutorials. We can post it on our YouTube page and things like that. I don't think Flying Wheel has a tutorial yet, but we will probably make one. We will definitely make one, and we'll post it everywhere: YouTube, Telegram, Discord. Have it on the product page as well, and I can explain how the product is working. So no worries about that. We should probably make a video about copy trade too. Do some promotions.
Yes, definitely.
Copy trade's pretty.
And yeah. Mm-hmm.
Cool.
Any more questions?
I wonder what kind of coins everyone's trading these days. Let's take a poll. All right, cool. I don't think there's any more questions.
All right.
Cool. Thank you, everybody, for joining. Thank you, Sia, for hosting. I hope everybody was able to take something away from this, and you guys should definitely try out the new product, especially in this environment right now. And I hope everyone have a nice weekend. All right, guys. Bye.
Bye, guys.